All right, here is the stock market. We're going to look at the SPY, that is the ETF on the S&P 500. We're going to take a short-term view of that. So we're going to switch over to the charts here. And I think this will be very clear to you, the style of work that we do comparatively. Here's a SPY chart, SPY, as you can see, on a daily chart. And there's a little bit on here that we bring in our own special way. But you can see it's just a candlestick chart. And here is the slim ribbon on there. There is a moving average right over here, which is the 89-day moving average. Our key moving averages on the daily chart we look at are the 89, as you can see here. And the center of the slim ribbon is the 13 EMA. Slim ribbon is made up of 3 different EMAs, the 8, the 13, and the 21. You can put this on your charts 3 different ways. Either download it from our site and upload it to Thinkorswim. TD Ameritrade is our preferred broker, and we encourage you to open up an account through our website. And down over here is the slim ribbon PO, which is the momentum signals that comes from the slim ribbon. You can see positive signals that are coming right over here, suggesting that the market is going to try to move to the upside again. When it was red and negative, you were getting negative signals, and it was moving down. So this is a standard chart that a lot of people look at with some of our proprietary indicators on there. But now when I switch it over to cycle analysis, you're going to see it just lights up with information that we put on there for our members. Let's talk about what we have right here. On the bottom are cycle brackets. These are a drawing tool, and it helps us understand money flows. As money moves in and out of the market, the shape of the cycles really helps us understand money flows. You can see in here there's a minor cycle, an intermediate, and a dominant cycle right there, and those cycle harmonics are 12, 24, and 36 days. Each of them is made up of a large harmonic family that we call there. So what we're looking at here in our analysis is that the first cycle came in here. It was about 14 days long. It was just slightly longer than the average. Cycle analysis has ranges of time in there, and there are slight variances. And this being at 14 is not that far off. This was 14, 11 days, 11 days, 10 days, 12, 12, 14. Those are all those small minor cycles that you can see. And then this other one right over here is the intermediate one, and the big dominant one right over here. When they're all lining up together, they're all going to be going and correcting on the downside. You could see the slim ribbon telling you it was negative. The slim ribbon PO went neutral for a couple days, but basically was showing you negative through the whole period. And now right over here, it's turned positive and beginning to give you upside signals. So this would imply that the market would be moving up. However, see this little green line right over there? That's this minor 14-day cycle. It broke that already. And what that is suggestive of the fact that even though we're getting positive momentum signals right here, that this is likely not to be able to move up, and that all of a sudden this will turn blue or neutral fairly soon. The slim ribbon is starting to move flat right over there, as you can see. So the bulls have to prove themselves right now. Let me zoom in a little bit more, and you can get the important information right here as we look at just this last cycle that we're in. So there's that 14-day low, the breakdown right over here, and what looks like a little flag forming in here, and the flattening of the slim ribbon. Still positive momentum. It looks to us, since this broke down under here, that this is going to continue in a correction. That would take you out to this level, this time frame out over here into early May for this big dominant cycle. There's a potential for some lows over here in mid-April. We talked about this mid-April as an important time in the past. These vertical lines give you the timing for that minor low there, and this for the more dominant lows right in here between these two vertical lines. What we're looking at is the potential for this minor decline to keep going out over here until early May. Now here's your supports right over here, your 38, 50, and this should actually, read 61.8. The levels right over here are at 444.50, 439.50, and this one I'm just going to remove because that one is not correct, and that comes down over here at about 433. So the levels that we're looking at potentially to move down, 439 makes some sense here, right in this level right over here, as some continued correction with a potential down to 433. If it gets down to 423.40, that's what we call our reevaluation level, and that would warn us that this rally right over here, which was a big upthrust with just a huge amount of rally of 11% in 11 days, that would warn us that that's over with. There's no energy left in the market to continue that out over here. If we hold in the support range that we see right over here, right around the 439 down to about 433 area out in the early May, then we would expect that we could test this level out over here. Breaking above 457.83 would be positive. In other words, this minor peak right over there being broken would be a very positive occurrence for the short term, and that would then say that something had changed in here. So right now, the highest probability looking at this and looking at all of these cycles and all of these important numbers is that the bulls are going to keep trying in here but struggle for a while and get into these supports over here and then begin to move up again. We had talked about for the longer or intermediate term that we thought that this rebound in a bear market would continue out into May. And this is what it looks like right in here, where it had the big rally, the consolidation into support, and the next move there out into May. So for the next 1 to 3 weeks, which this is really short term, we expect it to come down into this period here and then make a bottom, but not break down. Again, under 423.40, that is a warning. If it gets here under 410, well, you've got a crack going on. It's really a bear market resumption. We don't think that it's a high probability right now. The highest probability is some downward chop in here for the next few weeks and then beginning to move up in this period again. While this is overall a short-term bullish look to it, I still do believe that exists in a bear market. And all of this is simply just a consolidation of what was the beginning of it in this big downward leg that you had right over here. So we'll look for just this continued downward chop and then potentially an opportunity to catch another move to the upside here out into May. That is the short-term view for the stock market this week, and I hope you found that fascinating. Remember that the Ask Slim Cycle Workshop Special only has 1 week to go, and that you could save $500 by, if you're a member, become a member, and learn about all of this analysis that we do for just $797. I mean, just an amazing price.